go.
All right, assalamu alaikum everyone. My name is Maham, and our speaker today is Safir Mohiuddin. He's a co-founder at Guardrails AI and NIA, which is an investment fund focused on helping Muslims attain homeownership in a halal interest-free way. He's a community educator focused on helping Muslims build wealth. And if you want to learn more, you can check out his work at muslim.finance.
Assalamu alaikum.
Is it working?
Can you hear me?
You can take mine.
I can set it up. Yeah. Is it just
While we're
stop?
troubleshooting, I don't know.
Can I stand or that'll ruin the video? Can I stand or that'll ruin the video?
Go for. I mean, you want to stand the whole time?
No, just for the.
Yeah,
so
go
I
for
can
it.
see the thing.
Assalamu alaikum. Can you hear me? All right. So my name is Safir. Lived in the Bay Area my whole life, and if you can, someone can click the next slide. I like to teach people about building a values-driven framework to financial peace. And what that entails is not necessarily striving for the last and utmost dollar, but how do you do it in a systemized fashion so that you can focus on the rest of your life and not have to be checking the stock market every day. Some people base their emotions and their day based off of how the stock market went up or down. I hardly check it probably once every 3 months. I think I get more text messages from people about the stock market than I actually check it. So the only reason why I know a little bit more than maybe some of you is because I've been doing it for a long time. I've been probably investing for a little bit more than 15 years now. I have a website called muslim.finance. Think of it as just like a one-on-one personal finance guide, which will cover most of the stuff that we'll talk about today. Yeah, I'm a co-founder of two companies related to, I guess, Muslim finance. The first is NIA, that we do home financing via an equity model. If you've heard of like Amin Housing, it's pretty similar to that. And we have an investment fund on the other side. And then we have another company called Souk, which also does inventory financing for Muslim businesses. Next slide. All right, so let's talk about financial peace and security. I'm going to try to run the slides pretty quickly.
Can you speak a little louder?
A little louder, okay. I'm going to try to go through the slides pretty quickly and then we can do Q&A. So the first aspect to think about in terms of money and wealth is that it's not an outcome, right? It's like in our faith, we believe it's a responsibility and it's an amana. And so that's how I like to approach every conversation regarding like money and wealth. And again, what we're trying to do is really build a system instead of tracking every dollar. Like some people, they like to use like mint.com and track like every transaction of how much did they spend on coffee this week and whatnot. Like we're trying to avoid that as much as possible and just build enough kind of guardrails and systems in place so that you have control over your money, but you're not thinking about it every single day. Next. So to define like financial peace, we have to talk about two aspects. One is like, what does financial peace mean for you? And it's very varied. Like maybe you have to take care of your parents, and that's involved in your financial conversation. Maybe you have kids, and you have to take that into consideration. It varies for each individual person. That's the first part. The second part is most of like success when dealing with money has to do with like mastering the psychology of money. It has very little to do with reading a P&L or a balance sheet or anything like that. It's really about mastering the psychology of money. If you can figure out that versus like reading a P&L or a balance sheet, you'll probably be more successful. Next. So 4 elements I like to talk about for financial peace. The first is budget, second is savings, third is giving, and the fourth is investing. Okay. So we don't have to look far for like what we're trying to strive for. And so it's mentioned in the Quran about like guiding towards like this golden mean. Don't spend too much, don't spend too less, spend a medium amount. And one of the other like very interesting parts of our faith that I like to share with people is, if you think about zakah, right? We all pay zakah, especially Ramadan is coming up now. It's really, really interesting what you pay zakah on and what you don't pay zakah on. So you pay zakah on cash, you pay zakah on, if you own a business, you pay zakah on the inventory assets of that business, like commodities like gold, etc. You don't pay zakah, at least a full 2.5% amount on the value of the business, or like total value of the assets. You're only trying to do it on, basically, to sum it down, you're only paying zakah on unproductive assets. You're not paying on productive assets. So again, you're paying on inventory of the business, not the value of the business. So that's why, like, if you think about like investing in a stock, if you're at least holding it for a year, you're paying it on the assets of that business, of that stock, not like how much the stock is worth, right? So why is that the case? There's it's kind of disputed who said it, but it's mostly people say that Umar ibn Khattab said it, is that invest louder. So most opinions say that you pay zakah on that. Like, let's say you had one stock, Apple stock. You're doing it from a long-term basis. What you pay zakah on is that like whatever share that you have in that business, you pay on the assets of that, not the value of the stock. So if the stock was $100, you're not paying 2.5% on $100. You calculate, like, let's say the Apple stock was, I don't know, $10 in assets, and you had 10%, so you'd be paying only zakah on like $1 basically. So that's kind of the difference. Or let's say I own a shop. I'm not paying on the value of how much that shop is worth. I'm paying on whatever inventory I have, like rice or whatever, stuff like that. I add that up, and then I pay 2.5% on that, right? So it's most likely it's about Khattab, where he said to invest the money of an orphan so that it doesn't get eaten by zakah. So again, that's not about avoiding zakah. It's about, if you think about what's the purpose of zakah, it's to ensure that all money is used in a productive fashion. If it's sitting in the bank account, it's going to be used in a productive fashion for zakah. If it's invested, and like the whole way that we should be investing is in a fair and equitable process, then it's being used to benefit the economy. And so what we want is circulation of the economy to where people are taking risk, but they're also getting reward for that, right? So it's very beautiful of like how our faith and the wisdom behind some of these principles, when you start to kind of discover them. So this is one of the 2 books I recommend to people. I hate the title, but it's called I Will Teach You to Be Rich, where he says, in the end, managing your finances well is a lot like developing a strong personal productivity system. You keep track of everything without making it your full-time job. You set goals, you break them down into small bite-sized tasks. You save yourself time by automating manual work, and you spend your time and brain power focusing on the big picture. That's what I try to do with my time and money. So once again, it's building these systems. There'll be 2 books I recommend. This is one of them. He also has a Netflix show that you can check out. So one of the biggest principles about finance and investing is the power of compounding. Basically, the biggest lever that you have is time. The longer that you have, the time horizon that you have, the more that the money can compound. So this is an example of someone putting in $3,000 a year, so that would be like a little less than maybe like $250 every month for 40 years, and just getting a 6% return. Nothing too crazy, average. And you can see that the total amount that they would have put is about $120K, and the ending portfolio balance is close to $500,000, right? So when you're young, no matter how small it is, literally even $10 can have a very, very large impact with the power of compounding. Right? Yeah, this is another one of my favorite authors. His name is Morgan Housel, and this is one of his tweets. It's literally a book called Shut Up and Wait. So again, it's taking you have to know how to deal with the psychology of money, because everybody has different time horizons. You have a bunch of short sellers and traders and trying to optimize for the very last cent and try to make a buck in not hours now, in minutes, right? And if you get too caught up in that when you're trying to invest in the long run, it's going to mess up your psychology, and you want to stay away from that. Next. All right, budget part. So what I like to do, you can go next slide, is I divide up, like how I think about my budget is I have about 2/3 in living expenses and about 1/3 in these categories: giving, investing, and saving. This is post-tax dollars. Obviously, if you can't do all of this, you can change it, but I'm just sharing with you my thanks. So one of the important aspects that I like to talk about here is that there's only so much that you can cut costs, but like there's different ways to grow your income, and that's what you should be primarily focused on. Don't get too caught up in saving every single penny and dollar. Be conscious of your spending, but again, don't be the type of people that just counts every like week. Like I spent like $7 on coffee or whatever. Okay? So the way that I create my automatic system for my spending is I create 2 checking accounts. My paycheck goes 2/3 to one account, 1/3 to another account, automatically from the paycheck. And then from the main account, I pay all of my credit cards, rent, mortgage, whatever, stuff like that from there. And some buffer I have of like discretionary spending, let's say like 10%. So the point is that account should be pretty much like zero or have a little bit of income. If you're going over in that account, you know something's wrong. You're automatically going over budget or something like that. You have a very quick way to find that out instead of, again, packing as an expense. The other account is for savings / investing. So I put about 1/3 of my paycheck in there, and then if I'm investing, I invest it from there. If I'm giving, I do it from there. And then the rest that remains, that's basically the savings that I have. And then if you ever go negative or you're getting close to negative, you can always move stuff from the second account to the first account, but it's a very easy gauge to know what's going on versus not. So these are my principles of spending. That before spending, ask, would I still buy this if no one else knew? Right? Like we live in a very Instagram moment right now, right? Like if you literally no one else knew, would you still buy the thing? What's the trade-off between time and money? I believe that time is way more valuable than money. It's not even there's no equation of that. And how does this balance now versus later? And again, like trying to spend 30 minutes saving $10, it's not a winning strategy. If you do the math of, as an example here on the slide of doing it every single day, like you're really not going to save that much money. And it's just, you could be spending that time doing something else. Either making more money, enjoying your life, whatever it is. The people who do that, I don't think that they're actually achieving any objective. What you want to strive for, again, is financial peace, not trying to optimize every single dollar. Okay, the savings part. Thanks. So in terms of short-term versus long-term goals, right? What you want to avoid doing is investing for any of your short-term goals. So where you get your short-term goals and the funding for that is your savings, that savings account we kind of talked about, emergency fund, car, Pudge, whatever it is. I would say something less than 18 months, basically. Anything more than that, that can go in the investing bucket. That's for long-term stuff, down payment, retirement, etc. All right, investing. So the best investing strategy is to keep it simple, keep it automatic, and keep it long-term. It's been proven through studies, math, everything, that passive investors are better than active investors. Like you can't. It's very, very difficult, especially in this environment of hyper trading, to be able to beat that with trying to actively manage. So don't try. Don't do it on that. Doesn't work. Okay. In terms of investment guidelines, so what you want to do, what we're trying to do again is build a system, right? Of where to plug in your assets, right? So this is it's not unique. Like most financial advisors, which I'm not a financial advisor, would give you these type of guidelines of based off of your time horizon. Should you be investing? How much should you be investing in stocks, real estate, alternatives, cash. Now we don't have a great option for fixed income, which typically would be like most people would be investing in bonds. So the best kind of alternative that I suggest to people is doing something like real estate because there's not a lot of great compliant options, at least in my perspective. So what you want to do is write down all of your assets. If you go to the next slide. Just literally write down all of your assets, and I have a little spreadsheet template that you can use if you want. Write down every single one and back up into that percentage allocation. It doesn't matter what that percentage allocation is. You adjust it to your own personal preferences, how conservative or how risky that you can be. But the point is back into some percentage. It just takes the emotion out of the equation of some person texting you that this stock went up, or I guess the latest craze is gold and silver are going up. Next. Giving. Alright, so we obviously all know that zakah is mandatory, sadaqah is voluntary. The best deeds are consistent. What I do is I give every month, basically. I have it all audited. So I use something called Charity Vest. It's free. What you can do is you can donate to Charity Vest, either cash or you can donate your stocks, which allows you to optimize a little bit on taxes if you have any unrealized gains. And then I donate from Charity Vest. So Charity Vest is a charity in itself, so I only get one tax donation receipt a year from Charity Vest. I don't have to deal with all these organizations sending me a tax receipt. And then I can, whenever I choose, I need to sell some stock or whatever, if I'm over-concentrated in a position. Some of you might work in tech, you might have, let's say you work at Apple and you have a lot of Apple stock. You want to avoid selling it because you might have some gains, or you can donate some of that to kind of reduce your concentrated position. Next. Charity Vest, it's called the technical term for it is called a donor advised fund. Think of it as just like a charity that you can donate to, and then you can invest from that charity to any charity from there. Why people typically use it is to donate some money and then invest in it from there. But I don't use it for that. They don't really have good, well investment options. But it's just like just think of it as like a temporary mechanism to be able to donate to other places. Okay, buying a primary home. This is the most, I guess, hot take you could say of this presentation. There's multiple factors to buy a home. Money, family, whatever your situation might be. My only request is to do the math. Plug in the numbers. You can use NerdWallet has a pretty good calculator, buy versus rent, where you can see how much it is for the house, what the mortgage would be or whatever, compared to rent. In this area, it's going to be way cheaper to rent versus buy, but that's, again, not the only factor that you should consider. The thing I want to stress is, please do not view the place that you live as an investment. It's like one of the biggest mistakes that I see is when people treat buying a home, they call it oh, this is a good investment, thinking their primary value of the home will go up. And it causes a lot of problems, especially for people later on in life, old people making all types of bad decisions of not moving out of their 2 or 3 story house because they view it as an investment, they view it as something to pass on to their kids, and it's not the right decision that they should be making for themselves. Or moving somewhere else just because the cost of living is cheaper and they think that the house price is going to go up. Just live where you want to live. If it's more expensive to buy, but you want to buy a house because you want to have some stability for your family, that's totally okay. Just don't view it as an investment. That's my main point to you. In terms of options, there's conventional Islamic mortgages, UIF, Guidance, Devon, and then there's partnership-based models. So Green Housing is in California, a pretty good model. I'm co-founder of NIA. We have a pretty similar model. We mostly focus on other states, not California. We do have a couple here, but yeah, those are the 2 better options. I'm sure there'll be questions about that later. Next. Okay, Psychology of Money. I think there's some quotes here. Okay, so these are some quotes from my second favorite book. It's called The Psychology of Money by Norman Housel. So a few of his quotes: the hardest financial skill is getting the goalpost to stop moving. wealth is what you don't see. People think if they see a Ferrari, that's wealth. That's money spent. That's not actually wealth. You will desire less if you care less about what others think of you. And few things matter more than understanding your time horizon. So it's a fantastic book. I really recommend that you read it, but those are kind of some of his quotes from there. Okay, to summarize, what we're trying to strive for is to build financial peace. We're not trying to optimize for every single dollar. That's through making a system, right? At the end of the day, backing up into that system. We're not trying to track every single transaction, buy your coffee, whatever that you want to do. You don't need to be tracking on it on a weekly basis. Have some budget and guardrails kind of in place. And the savings is for short-term goals. Don't invest for short-term goals. Only invest for long-term goals. Things can happen with your investment, and that's why you don't want to be focusing that on the short-term aspect. Living is central. Try to automate it as much as possible, and just try to avoid extremes. Right, like what we're trying to do with the asset allocation spreadsheet that we talked about was that we're trying to build again a system and not trying to follow the craze or the hype of the moment of investing in blah or blah. I think that's it.
I think that's it. Yeah. All right.
We can go to Q&A.
Let me see. Is it on?
I turned it off.
I can turn it on. Okay, give me a second.
Okay, so there are plenty of questions already in the Slido. Please feel free to upvote any that you want to hear in particular. So starting off, how do you calculate zakat on modern compensations like RSUs and stock options? And how about for retirement accounts, such as like a 401k, IRA? Like when do you owe and how do you value like unvested versus vested versus exercise positions?
So there's two for 401. Let's start with 401k. There's two different opinions. One of the opinions is that the valuing it on the assets, right? That we talked about, valuing it on the assets of the business. If you take that opinion, you are paying it on your 401k from your non-retirement assets. There's another opinion that you don't have to pay on 401k, like Sheikh Joe Bradford, I can take that opinion, but there's some certain other rules for it, like you would not do it kind of on an asset basis for the other portion. So the best like guides I recommend is Zoya has a calculator, or Sheikh Joe Bradford, I think he has one called Simple Zakat Guide. You can check out both of them. The other question was about RSUs. You don't have to pay zakat on any unvested RSUs. You're only paying them on vested RSUs, and it would apply the same fashion. If you use Zoya, then you can just plug in you can connect your portfolio, and it'll just tell you automatically how much zakat that you owe. So that's the easiest way to do it.
Thank you. So taking a step back, say for like a young professional starting from scratch, and you kind of touched upon this a little bit, but what is like a simple halal like default plan, such as like a percentage to save and invest, and like some recommended investment strategies, such as like should you just like invest in ETFs or pick individual stocks?
Yeah, I think if like you're a young professional, you should probably like saving / investing bucket should probably might even be more than the 1/3 that we kind of talked about. Could even get to like 40 or 50%. In terms of like what to invest in, again, make sure that you're doing it consistently, but ETFs like SPUS, which is like the S&P 500, which is pretty good. There's also Amana Growth and Amana Income, which are mutual funds that are pretty good. I generally tell people to avoid investing in individual stocks. If you want to do it, just do like 10% of the funds but 90% I would just put it in ETFs and mutual funds. That's kind of what I do. I have my own pie that I publish on Muslim.finance, which is a filtered version of QQQ, which is like the top 100 stocks of NASDAQ. I haven't updated it for this year yet, but I usually update it on a yearly basis. So I use M1 for that, which kind of allows you to buy this basket of stocks on a reoccurring basis. You can just buy the whole basket. So I just buy like 150 or 200 bucks of that pie on a weekly basis.
Okay, thank you for that. So there's a couple of questions actually about this like stock picking and like what to invest in. So one of them is how to diversify investment accounts when there are only a few Halal ETFs available.
Yeah, that's a good question. Yeah, one of the biggest problems with like our community is that we are very exposed to the stock market. Like whether you're young or you're old, there's not a lot of options. Like the time horizon spreadsheet that we looked at, like if you're getting closer to retirement, you should be almost like 50% of your portfolio in a bond like fixed like instrument, and we don't really have that option. Some people, they invest in something called Sukuk, which is like, it's basically kind of like bonds. They're like, I guess you could say like a Sharia compliant version of bonds. I personally don't like them because they're kind of pretty murky of what they actually invested, and they have a lot of international exposure. Most of them are from like foreign governments. So I don't usually invest in that. I would just do it in real estate. So I would say like once you have like maybe like 100K of assets that I would consider investing in real estate. Sharia Portfolio also has an ETF called SPRE, which is a good way to temporarily do so before like getting into actual real estate. So that might be one. Other ways is just make sure that you have some exposure outside of non-tech stocks. I know like we kind of live in a bubble here in San Francisco, but it's always good to diversify kind of away from that. Everything looks good when it's going up, but that's what we're trying to do by diversifying is have broad exposure and when things go down. So like one of the good examples I like to give people is like if you have real estate, what you're getting is not more appreciation, you're getting more income. But if you have like, I don't know, 10 or 15% of your portfolio in real estate, if the market goes crazy up and down, like you have some consistency coming in from the real estate income. You might not be using it, but you'll feel a lot better just because things are a lot more stable versus just bouncing like very high and low based off of kind of how the stock market's moving.
Yeah, that makes a lot of sense. Another follow-up on different types of investments. Is it better to invest in physical gold or gold stocks / ETFs?
Either is fine. The only thing you have to be careful of with most gold stocks is that they're typically options. They're typically futures. So they're not buying actual gold. They're buying like almost like call options towards gold, or they're levered. I buy GLV. It's an ETF where they're actually storing the gold. So it would go in that bucket that you kind of talked about, like that 5 to 10% bucket of alternatives.
Okay, that makes sense. So you mentioned like options. Just I guess like a more educational question for everyone. What are the differences between various investment strategies such as options, crypto, short selling, day trading, ETFs, and like buying individual stocks? Why would you pick one over the other, and how does this fit into Islamic guidelines?
Yeah, so my personal take is that most options are not compliant. The central premise of that is that you should own the thing that you're buying or selling, and in options, most of the time, you're not owning what you're selling. Some scholars like Sheikh Joe, they do allow some type of options if you hold the asset. You have to hold the stock that you're basically like selling options on. I personally don't follow that opinion. I would avoid like short selling, day trading. I'm sure you see it on Instagram or some friend told you that it's working out great. They'll never tell you when it's not working out great. And just ask them now probably like how it's doing. It's probably not doing that great. So you always hear about these things, but like it never works out kind of in the long run. This my core like philosophy is like let your money work for you. Don't work for your money. If you spent the whole day like doing your regular job, and then you're trying like let the money work for you, not have to go and do another job and going and trying to figure out that, right? So again, long-term systematic automatic investing is what I prefer. My personal strategy, just because I have a bunch of different investment funds, is a little bit less in the stock market. I would say it's probably like 50%. But that's because we have like various other investment funds.
Okay, another hot topic is trying to avoid haram money. Are there any resources to know which long-term investment options are Sharia compliant, not based on interest, alcohol, gambling, etc.? And additionally, how do you think about instances where potential investments have primarily halal operations, but maybe have some level of interest-based income?
Yeah, so you can use Zoya. It's an app. They have like a freemium version that you can use for it. Basically, there's 3 rules. Number 1 rule is that 95% of the income has to be permissible. So you cannot have more than 5% of impermissible income. That's rule number 1. Rule number 2 is you cannot there cannot be more than 30% debt there's different opinions of what the denominator is, but most people say that the denominator is the market value of the company, so the market cap of the company. So that's rule number 2. Rule number 3, I forgot the threshold. I think it's 30% as well. Is that there cannot be 30% of income from any interest-bearing like securities. Like the company should not be investing in bonds and have like 30% or more than 30% of their income from there. Those are generally the 3 rules. You can do the same thing on an ETF basis as well for like bucket of stocks. So that's what I primarily use. One thing I've been doing these talks for a long time, and actually it's been interesting that most people just buy SPUS now, and it was not the case like 5 years ago actually. A lot of people were buying like individual stocks, and it's actually been very pleasantly surprising to see that a lot of people have moved to just buying SPUS and sharing that with each other.
Another question about zakat. If you have student loans, 401k, Roth IRA, or taxable brokerage, how do you calculate zakat? I think the primary one is like the student loan aspect.
So you can minus it by any like obligations that you have, right? Like when you do zakat, you're doing your assets minus any obligations that you have. You get the number, and then you calculate from there. So yeah, that's what I would do. Most calculators have that variable that you can plug in. If you have existing student loans, I'm on the board of a nonprofit called ACC, stands for Continuous Charity. We provide interest-free student loans at no cost. You have to usually pay it back in like 4 years, and we also refinance existing loans. And so I think our application process is actually open right now till April. So check it out. I think it's called ACC. The website is acceducate.org.
An additional question. Do you have any resources for how to effectively do financial research when it comes to picking stocks or investment options?
For financial research, I usually read like, I don't do that much these days anymore, but I usually read like different like analysts. You should know like how to read like a P&L or like a balance sheet, so you can look at that in like Yahoo Finance or different mechanisms. So yeah, there's different analysts. You just have to be careful with some of the analysts because they're trying to like sell their own book as well, so you just have to be careful. One guy that I like to read is I think his Twitter is Stock Market Nerd. he's pretty good. I like reading stuff.
Good to know. There's a couple of questions about real estate investing. I'm sorry, I just lost it. Okay. Can you clarify how you would invest in real estate in a Halal way? Would it be like via stocks, or putting money down on a physical asset? And secondly, there are a couple of halal real estate funds you can invest in, like Provision Capital and Amin Housing. What are your thoughts on those?
Yeah. So the kind of the way to first get in is to just buy SPRE, which is Share Portfolio's real estate ETF. So that's investing in real estate companies that are Sharia compliant. There are some, there's very few, but there are some. Ones like, I think Public Storage has pretty low debt. They do like self-storage. There's a few other ones. So that's what they mostly use. I don't do that just because I'm directly in real estate, but that's a good way to get started. In terms of real estate funds, yeah, I would like once you have like decent capital, I would move to owning it directly. It's just better because owning real estate through the stock market is you're subject to the volatility of stocks, which is like exactly the purpose that you're trying to avoid by investing in real estate. You want kind of more of that income-based aspect. In terms of other funds, yeah, I mean housing is great. So that's one option. I think they're at like 4.5 or something like that return. It's also beneficial if you're trying to buy a house in California. And I don't think you need to be an accredited investor, which is also good. Provision is another one. I've invested in Provision in the past. They do more flipping, so it's definitely riskier on the spectrum, but that's another option. We have NIA, but we only do it for accredited investors. So that means you have to make at least 200K as an individual or 300K as a couple to invest in it. That's like the SEC rules. But I mean, housing is a really good one to get started. They might have some governance issues, but largely it's a good option.
Okay, good to know. So this one's been upvoted. Playing devil's advocate here, what is your opinion on investing in yourself while you're young rather than investing for your retirement?
What are we talking about there?
Whoever asked that question, feel free to elaborate.
Your best investment.
Yeah, so like, I feel like when you're, by the time you retire, you're like 59, 60. I feel like you can invest in yourself now, and that way you're like creating more value, like more potential income in a state where like you're, sorry, in a state where like you're energetic.
What does investing in yourself mean? Like taking courses or what?
Investing in yourself, it can be anything. Like having a higher quality of life, and that might not translate into value, but just like I don't know. I think, yeah, like it's hard to say like okay, like I'm living like a luxurious life and that's gonna translate to value, but
Yeah.
might like.
I think I understand what you're trying to say. So is a question basically like, why not like kind of like enjoy, say like your 20s, as opposed to like grinding and investing for like your long-term financial goals? Is that?
Not like, not necessarily, yeah, sure, yeah, kind of.
We also mean like depends like when you're investing now, let's say lifestyle, whatever courses, it means still like other opportunities.
Could, yeah, like, you could like, be, like, spend more money to go somewhere and that kind of thing. It's really like, building connections.
So I guess like what's the balance between like planning for the investing for the future and like living in the now?
Yeah, I think it's a good question actually. So we talked about like the power of compounding, right? So like that's I think the biggest benefit to doing it like on a very long term basis. Like I invested like when I invested so much when I was single that like now I can't afford to invest as much. I have kids, married, house, whatever. It's much harder to allocate like so much more money for that. But like that base of when I did invest very heavily will carry me basically for a long time. So that's one aspect. But the second aspect is, yeah, like what I'm trying to emphasize also is like don't try to save like every single dollar. Like spend on yourself. Enjoy. Like if you read Ramit Sethi's book, he kind of like emphasizes this point of like enjoy your life, right? Just create some like systems basically around it, right? So I would say like have a baseline of investing and stuff like that, but still like enjoy like your life in the moment. I think the people that are too like stingy about like investing or saving every single dollar like end up regretting it later. And besides, like, where's the money gonna go? Like, you know, it's either gonna be spent or like it's gonna go to your kids like when you die. So what's the point? So I do agree with that. There's one other thing I was gonna say, but
Thank you for that. Let's see, there's a question about budgeting. It says one of your tips on managing budgets is when your checking account goes to zero, but most people use credit cards. What advice do you have in that regard?
so I'm still using a credit card. I'm just paying my credit card from the bill from that first checking account, right? So it's kind of delayed like 30 days or whatever because when you pay your credit card bill, but you'll still have like an idea of like if you're overspending from there.
That makes a lot of sense. There's a couple of questions about kind of like the effects of like the current climate on the stock market. So with what seems like so much political instability and just like, you know, market manipulation and all of that fun stuff, is investing safe? Should we think about investing internationally?
Yeah. So investing internationally is very tricky because like we are very lucky to live in the United States. Any other country in the world, they're like begging to basically invest in the US because despite what anybody says, basically the US is still the whatever they call it, the main currency, right? It's the reserve currency. So if you invest in something like Turkey, like in the last 5 or 10 years, even though that market went up, you lost like 80% or 90% of your principal because of the currency devaluation of the lira. So you have to be really, really careful about that. I still do recommend investing some internationally, like maybe like 1 or 2%. I think I do have an ETF called TUR. I would probably buy like, you know, a little bit of gold, a little bit of I don't do that much like crypto, but you can buy like a little bit of Bitcoin to kind of like hedge that. And yeah, I would start looking for, you know, maybe I wouldn't be like 90% of my portfolio in stocks. I would probably be kind of like 70 or 80 and look at other alternatives there. So it is really difficult right now just because there's a lot of not only political instability, but like the pace that AI is moving could be like very disruptive to a lot of these larger companies. So that's something to get really careful of as well.
By the way, there's some folks in the back having. If you guys mind speaking into
Oh,
the mic?
sorry.
There we go. Yeah, thank you.
There are a couple of questions about financing that I think is particularly pertinent, especially in our SF like startup environment. Is what are the options for like financing a business or startup? Are there any interest-free, equity-free loans or funding options?
Yeah, so in terms of a business, there's 2 primarily ways to do financing. If you're doing a startup, you're doing equity financing. That's generally pretty compliant. There's some minor terms in a safe that are a little bit problematic. Shakespeare Balfour, I think there's an article about this, you can check it out. Mostly because it's very detailed, I don't want to go into it. The second aspect is, so that's mostly for like startups. If you're having like a small business, there's really no great options. Typically, most small businesses, they don't want to give up equity. That's something that you could do, but it's very expensive. So we started a company last year called Souk Capital, where we provide inventory financing. that's not based off of debt, it's based off of like profit sharing. We're the only ones, I believe, in the US that do it today. We funded about 20 different companies, like if the ladies are familiar with like Veiled and stuff like that, these are some of our customers for Zook. But yeah, unfortunately there's not a lot of great options for small businesses, which is why we started the company.
What's your website called? Zoom?
Souk, SOUQ.capital.
Do you want to move to? Hey, Mom.
So I
Can we move to audience
have
questions?
a business also and startup also.
Is there a lot
I do
more?
have some, like,
I don't. Maybe we should let people ask. We're here. What do you think? Like one or two in the audience?
Yeah,
Like people ask in the audience?
yeah,
Yeah, I think so.
yeah. Yeah, there's not a lot of great options for small businesses, so yeah, do check out Souk, it has some more information about that.
Thank you. I feel like I've been asking a lot of the questions, and I think it's time that we open up the floor to the audience. You guys can feel free to ask whatever you want.
I want to ask you a question. You mentioned that time is more valuable than money, which we all agree, but it's also more costly. And you mentioned the Islamic mortgage. And I was just wondering, in terms of lender, how the lender makes money with the Islamic mortgage.
Okay, so the question is how the lender makes money in the Islamic mortgage. So I'm a little biased here because I have a alternative mortgage company called Nia that I'm a co-founder of, but I am familiar with the conventional Islamic mortgages because I actually still have a conventional Islamic mortgage myself. So there are generally two fatwas to consider. One on mortgages. The first is fatwa, I think in the 70s or the 80s by Qardawi, which basically says that you can use a conventional mortgage to buy a home in America, one house, like for yourself, only. It's not like unlimited buy investment properties or whatever, it's for you to live in the home. That's the Qardawi fatwa, that's what some people use. The other fatwa is by AMJA, American Muslim Tourist Association, where they have said that guidance, UIF, Devon, all of these pretty much are to be used in cases of dire need. Now that's subjective, so it's subjective to whatever you kind of deem. Amina Housing does have full approval, as does NIA. So the way that these Islamic mortgages, the traditional ones, work is that they're very similar to traditional mortgages. Look, at the end of the day, like let's back up a second, the core premise of compliance of investing in Islam, it's very simple. You have to take risk and to get reward. There's no option where you can get reward without risk. So what is a loan? A loan, an interest-bearing loan is that you are getting a reward, you're getting like interest basically, by not taking any risk. And credit risk is not considered risk. Like someone not paying, that's not considered risk. You have to take actual risk in the business, basically. So the Islamic mortgages, generally, what they're doing is, there is actual contractual changes that they do have. That is true. It's called a shape contract. It was approved by Freddie Mae and Fannie Mae, and that's what most of them use, Fannie's and UIF. But it's mostly contractual, it's not substance-wise. The bank is not taking any risk. It's pretty much, it's a profit rate instead of an interest rate. And sometimes what they're doing is, they're giving you the loan, okay, and then sometimes what they're doing is they're buying the house temporarily for like a day, and then selling it back to you at basically an interest, at a basically up cost. And
They charge, right?
yeah, they go back into the interest rate basically, based off of, they'll buy the house for like a second, and then they'll sell it back to you at whatever the interest rate basically is, back into it, right? That's what most of them do. Some of them have like a partnership-based model. Generally, it's about the same. So they're all selling to Freddie Mae, Fannie Mae, like all the traditional banks, and they're not participating in any risk. If that house, just think about it, it's very simple. If that house goes down in value, if that house is in the swampland, they could care less because they have a loan, they have a lien on the house. It doesn't matter for them. If you're like Amin Housing or NIA, we have to underwrite like where that house is, where do we think that that value is going to go up. That's why we only invest in specific areas, right? So really the thing to think about is like risk and reward. But like what I would say is it's an option of dire need. Like it's fine probably for like one house, but a lot of people unfortunately they take that and then they run with it. They buy like investment property or whatever. That's not what you should do.
So Islamic mortgage only gives you the loan for the primary housing?
No, they actually, so yeah, this is the problem. They do give you loans for investment houses too. Even though like their Sharia approval, if you read the Amjad Fatwa, it's like almost 11 years old. It's only for dire need. How can there be a dire need for an investment property? That doesn't make any sense.
Maybe one more question before.
As we go on top of real estate, I just want to ask about businesses, like the Bird method, right? When you buy, fix, and flip, for example, how do you go about something like that, right? If you want to buy an investment for yourself, obviously there are opportunities for that. I mean, obviously, something you can do in this case. So, how do you advise somebody on something like that?
Yeah, remind me again. I've heard of it before, but remind me of the
You
Bird
buy a
method.
house, you fix it up, you renovate, you rent it
Yeah.
out, right? You sell it, for
Yeah.
example. Yeah. So,
So the question is like, what about the Burr method? Buy,
renovate it,
renovate, refinance,
rent it,
rent it.
or sell it. For
Yeah.
example.
So my view, there's no pretty like for investment properties, there's no compliant like loan option basically, right? In terms of like let's say you were not doing that. Let's say you were just buying, renting. That's a business, right? Treat it as a business. It's not like side income, okay? I have owned more than like 150. Before we started NIA, we had about 150 properties in Michigan. Like doing flipping is the most painful thing that you can do in the world. Like I would not recommend that you do it. And even owning rental property is extremely painful. It's actually like very fascinating. If you think about the NIA model, what we're basically doing is the homeowner puts 20%, we put 80%. The homeowner is renting from us at market rent, okay? And we're paying our portion of taxes and insurance, whatever portion that we own. Versus in a traditional landlord-tenant model, the tenant is moving out like every 16 months. I have to change the paint, carpet. It took me 18 months to sell those 100 properties. Like I had to renovate like every single one, put them on the market. I never wanted to do it ever in my life again. And so again, it's very like the Islamic model actually is a better model because my tenant in the NIA model and Amin Housing model, my tenant is a co-owner of the house. The way that he takes care of it is completely different than a regular tenant would. And it's beneficial basically for both parties involved because they sit on the same side of the table instead of on opposite sides of the table, right? So there's a lot of like, I think we're just very accustomed to like the Western mentality and we're just so used to like that sometimes once you start peeling the onion of kind of the Islamic models, you will really start to see the benefit of some of them.
Thank you, Jazakallah, so much for your time. We're gonna wrap the group session now. If you guys have any personal questions, if you have time, feel free to come up and ask. Thank you all for coming.
Hey, assalamu alaikum everyone. So you're welcome to stay here. We're gonna move into like hanging out, co-working. Like we have the space for the rest of the night, so grab chai, hang out. You're not getting kicked out. But yeah, do you have any more? Are you staying around for a few minutes? Yeah. If you have any more questions, feel free to ask Safir. And yeah, and then real quick. So of course Ramadan is coming up next week. Crazy. Couple things. So quickly, two or three things. We're going to be doing iftars every Wednesday roughly in this space. So if you're on the particle for this, we'll send you invites for that, inshallah. Alif is doing their Ramadan, of course. It's like 5 blocks, 22nd edition as well. So, and then tomorrow we're doing a pre-Ramadan halaqah led by Imam Ustad Kahari and Basil from WVMA. So come out to that. That's going to be also in the city. So if you need to find the info, follow us on Particle or follow us on Instagram. We got all the info. But yeah, thanks for coming and hang out here. The space is yours. Assalamu alaikum. Cool.
How long have you guys been doing that?
Since? Yeah, so this is people can do whatever they want. Hey, Islam, good to see you. How you doing? What's your name? Oh, is this?
Yeah.
Yes, okay, your brother, yeah. Okay, good stuff. I remember. Yeah. Zakaria, who's that? You're in insurance. I work in insurance too, so I'm not sure. What kind of insurance is it?
Doing group insurance, and then we're doing Sharia compliant life insurance.
Oh, okay. So you fast. That's bad.
Let's talk. I'm probably busy for.
Yeah, you texted me. You forgot. So yeah, we can properly catch up. I'm around. Yeah. Okay. Let's do it. But how long are you here till?
Tomorrow. Yeah, I got the Austin.
Okay, it's probably gonna be tough. I mean, I'm actually in the middle of closing our days, so it's so busy. And this stuff, so probably not gonna happen today. But you have my number. We can do a call.
Yeah, totally.
Let's do it.
Probably not in person.
I mean, any friend of Omar is a friend of mine, so it's a good thing.
Cool. All right.
All right.
Thanks a
Good
lot.
seeing you.
All right,
Take care.